Welcome to your Mortgage Insider Update. It is March the 10th, and we are coming off of the February jobs report on Friday. Came in a little weaker than expected, a boon for interest rates. Some other comments from the Federal Reserve Chairman last week were actually a negative to interest rates. Basically, the Fed's going to wait and see. That they're constantly, dependent on the data. So the most recent data here is that the jobs market is not doing that hot. This coming week, we have consumer price index and producer price index, the next round of inflation, also expected to be pretty much par for the course. Likely to see just under 3% inflation on the consumer price index. The Fed's favored measure of inflation was just a few weeks ago with the PCE report, which was also pretty nominally lower, but with upcoming inflation numbers not expected to be groundbreaking, but to keep kicking the can down the road with the Federal Reserve and holding rates steady. We are seeing the 10-year bounce back down. Actually came back up last week. We're going to take a look real quick. A lot of unsettlement around the tariffs, causing overall stock markets are reeling pretty badly starting to the beginning of this week. A lot of times when money comes out of the stock market, it does go into the bond market, and we're seeing a pretty heavy move lower with rates after seeing an uptick last week with the previous numbers. So as we can see, a pretty heavy move lower on the 10-year Treasury, 4.215%. It was lower just a week ago, came back up, and then now pretty heavy move today. Like I said, the stock market's down significantly. The major stock indexes, the S&P 500, which we have a little bit of a window of that here, but also the Dow and the NASDAQ specifically was down significantly, which is the tech stocks. Mortgage-backed security prices are higher. As the prices move higher, interest rates are moving down. Let's take a look at the 10-year for more detail. So this 200-day moving average is kind of our line in the sand. We broke back above that last week, just prior to the jobs report, stayed above it on Friday, but then today moving lower, trying to get back into this range. Would make a really good range to get down as low as 4.12 or 13%, which we just touched on that last week. So hoping that the trend with softer or at least continuing consumer price index that's not rising, it's likely to come down like 0.1% from 3% to 2.9%. That would be a positive in the market and would keep us in this range right here as we get that report out on Wednesday. So we'll keep an eye out on the consumer price index, producer price index as this week plays out, hoping to keep a level, a top on interest rates after having a little bit of a scare last week. So far, all the data is coming in our favor. Have a great day.